You've successfully sourced your products online. You've given the detailed product specs and you've ironed out the details and you're all set to start the importing process. You receive the invoice from your international supplier and you realize it's quoted in US dollars. What happens next? I'm Victoria. I'm a website designer with a background in finance. I'm passionate about helping businesses grow online. In this video, I'm breaking down the ins and outs of managing a business relationship with international suppliers as a South African business, as well as talking to why it's important to establish a good relationship with your suppliers. I'll also show you how to navigate foreign currency transactions from a South African perspective, and I'll give practical applications to assist you making your payments process to a foreign supplier as painless as possible. Foreign currency is a complex topic, especially from a South African perspective. This video simply gives an overview of what's possible in particular circumstances. It's not exhaustive and in no way does it constitute financial advice. Please be sure to do your own homework and your own research when it comes to making financial decisions regarding foreign currency. Once again, I've decided to put together a free guide that breaks down all the info covered in this video. I'll include a link in the description. And if you find this content helpful, please hit that like button and subscribe. It really helps me to grow this channel and keep creating content like this. Drop a comment below if there's anything specific you'd like me to cover in future videos. Let's dive in. When you choose to source products internationally, you're opening up incredible opportunities for your business. You get access to products, prices, and manufacturing capabilities you simply don't get locally. However, there is a certain level of risk involved too. Sourcing internationally means dealing with minimum order quantities, shipping costs, customs delays, duties you didn't budget for, and the very real possibility that what arrives doesn't match what you ordered. Here's what's really happening when you work with an international supplier. There's a two-way trust relationship at play. Essentially, you're trusting your international supplier to manufacture your product to the correct specifications, use quality materials, meet production deadlines, maintain consistency across orders, and protect your design and your intellectual property. And by the same token, your supplier is trusting you to pay on time, to provide clear product specifications, to not cancel unexpectedly, to be a reliable long-term customer, and to honor your contractual obligations. When you can pay a supplier easily, reliably, and on time, you become a preferred customer. That means better prices, priority during seasons, and flexibility when you need it. Get this wrong when you pay late or you use unreliable payment methods and you create hassles for your supplier, then you'll find yourself at the bottom of their priority list. Or worse, they'll refuse to work with you altogether. This is why it's so important to establish a good relationship with your supplier early on. A good relationship entails clear communication where you have regular updates on orders, timelines, or queries, reliability with accurate specifications, commitments, and order volumes, professionalism with clear contracts and respect for their business processes. Some supplier red flags include inconsistent responses to inquiries, vague answers about factory details, location, and capacity. They might pressure you to decide quickly, prices that are too good to be true and are significantly lower than everyone else. They might demand full payment upfront with no alternatives. They could request payment to personal accounts instead of company accounts. They could refuse to allow third-party factory inspections. Trust your instincts here. If something feels off, it probably is. There are thousands of suppliers out there. Don't commit to one that raises red flags just because their price seems really good. Here are a few tips when sourcing internationally to verify an international supplier. Verify their business by requesting their business license and registration documents. Verify their business address by using Google Maps. If you're using a supplier from Alibaba, be sure to look for verified supplier or gold supplier labels. Review the buyer feedback and their transaction history on the platform. If you can, visit the factory in person, or you can use a third-party service who can go and verify the business for you. They can check the address as well as check the goods before shipment. You could also request a sample before placing a bulk order. Check their online reputation by doing thorough research. Before I get into the payment methods, there's some important groundwork you need to cover when importing into South Africa. Regulated products. Certain products are regulated by specific regulatory bodies in South Africa. If you're importing electronics, toys, certain chemicals, automotive parts, or food products, you will need an NRCS letter of authority before they will release goods into South Africa. Be sure to do your homework on this. An importer's code. First, you need to register as an importer with SARS and get an importer's code. You cannot clear goods through customs without this. Customs duties and VAT. Every product has an HS code that determines what duty you'll pay. Rates range from 0% to 45% depending on your product category, plus you'll pay 15% VAT on the value plus the duty. I've included a link to the SARS tariff book in the description. Use it to check what your products will cost to import. Freight forwarding. Unless you want to handle customs clearance yourself, find a good freight forwarder or customs clearing agent. They'll navigate the paperwork for you. Right, let's talk about payment terms. When you agree to buy from an international supplier, you'll need to agree on when and how you pay. Here are some common payment terms when it comes to paying foreign suppliers. Payment in advance. This means full payment before they start production or ship anything. This is common when you're a new customer with no track record. It's lowest risk for your supplier and highest risk for you. Deposit plus the balance. This is the most common arrangement for manufacturing. Typically, you pay a 30% deposit to start production, then the remaining 70% balance before they ship. Letter of credit. This is where your bank guarantees payment to the supplier once they present the correct shipping documents. It's secure for both parties, but involves bank fees and can be more complex. Usually only worth it for substantial orders. An open account. If you have built up a really good relationship with your supplier, then they can agree to ship the goods without having received full payment. You can then negotiate the payment date with the seller, which can be anywhere from 7, 30, 60, or 90 days after the goods have been shipped or delivered. As trust builds with your supplier, you can also then negotiate better terms, which will be good for your cash flow. Now, let's get into the mechanics of actually paying in foreign currency. This is where it gets interesting. Essentially, when you are doing a foreign currency payment, several things must happen. You have South African rands in your bank account, hopefully, and your supplier requires payment in a stipulated currency, whether it's US dollars, pounds, or euros, and many Chinese suppliers will accept payment in US dollars. You will then need to essentially buy US dollars at the rand equivalent at the time of the transaction. So, if you need to pay your supplier $5,000, you will need to buy $5,000 at today's current exchange rate, say of 16.50 Rand against the dollar, and sell 82,500 Rand. The foreign currency must then be transferred to their bank account. Sounds simple, right? And here are a few things to consider in this whole process. Exchange control regulations. South Africa has strict rules about money leaving the country and coming into the country. So every foreign payment must go through an authorized dealer, and that's a licensed bank or Forex provider regulated by the South African Reserve Bank. Next up is the balance of payments codes. Every international payment needs a reason, and that's called a balance of payments or a BOP code. This tells the Reserve Bank why money is entering or leaving the country. Your Forex provider will help you with this, but essentially you need to provide supporting documents like invoices or a bill of landing. Settlement times. Here's something that's not immediately obvious, but Forex transactions don't settle immediately. A spot transaction means you agree to a rate today, but the actual exchange happens 2 business days later. The rate is locked in, but the money can't be transferred yet. So some of the costs involved when you make a Forex payment, here are a few elements to consider. The exchange rate at the time of the currency conversion, the markup on the exchange rate that the Forex provider charges you, the SWIFT fee for the international transfer, a possible transaction fee, and beneficiary bank fees at the supplier's end. The exchange rate markup is a big one and it's often hidden. If the mid-market rate for US dollar ZAR is 16 Rand 50 and your bank offers you 17 Rand, that's a 3% markup. As a hypothetical example, on a 100,000 Rand payment, that's 3,000 Rand in exchange fees. The average markup on foreign exchange typically ranges from 1 to 5% of the transaction value, depending on the type of provider you use and currency pair you're trading. Let's take a look at some of the payment options we currently have in South Africa. These are only some of the options. It isn't all of them, and they're also conditional on your business requirements. Once again, please do your own research. If you need to make a deposit, purchase a sample, or make a payment that is under 15,000 Rand, then you can have a look at some of these providers. The first one is PayPal, internationally recognized, and it's only applicable if your supplier has a PayPal account. Your supplier can simply send you a payment link and you can then make payments using your credit or debit card. PayPal is really easy to use, however, it's really expensive. Transaction fees are high, and your supplier may add transaction fees to your quote as well. Mama Money and Mukuru. Mama Money or Mukuru are money transfer operations in South Africa. They specialize in helping people send money primarily across Africa, but they do also serve markets like Europe and America. Both Mama Money and Mukuru are designed primarily for personal remittances. So if you're sending money to family or friends, they're not specifically designed for business-to-business supplier payments. Setting up an account is relatively painless. You will need your cell phone number, ID documents, and a physical address handy to complete your account registration. From there, then you can top up your wallet using cash at applicable outlets like ShopRite or Pick n Pay. There is an extensive list on their websites. Or you can use EFT and they will then allocate your funds to your wallet. Then you can send money to your recipient. They can receive it via mobile wallet, cash pickup at an agent depending on the country, or directly into their bank account. And this will be dependent on where you're sending the money to. Mukuru and Mama Money offer decent rates and give you quick access to transferring foreign currency. However, you are limited by currencies and how much you can send in one transaction. Like I said, when I started, they're also not really targeted towards business supply payments. It's rather for personal transactions, but it is an option for smaller payments. The big banks also offer digital Forex wallets aimed at travelers particularly. So Standard Bank has Shift, FNB has their global account, Nedbank has a private client global card. These can work for small international payments, but they're really designed for travel spending rather than supplier payments. But it's worth exploring if you already have an account with either of those banks. If you're making large foreign currency payments in excess of 15,000 Rand, then I would recommend looking into opening a Forex account with some of the larger banks who have specific specialized Forex departments to assist with your transfers. You can also then negotiate better rates and get further assistance, like FNB offers a comprehensive service for SA businesses looking to import and export. It is also important to note that you can choose a Forex account with a bank that is not your existing bank. Here's a list of the banks with Forex capabilities: FNB, Standard Bank, Capitec, Absa, Nedbank, and Bidvest. I wanted to include Wise here, but they've only just been given conditional approval to operate as an authorized dealer in South Africa. Wise is a British fintech company that specializes in international money transfers and multi-currency banking. So let's see what that space holds for us when they start operating in South Africa. Here's what the bigger banks offer, and that's a dedicated Forex department for business clients, the ability to negotiate rates on larger transactions. Compliance is primarily handled for you, forward contracts to lock in rates for future payments, and import and export support services. Please do your own research. Contact each bank to double check their fees and their commission structure. Make sure you understand exactly what you're getting. I'm not affiliated with any of these banks. I don't endorse one or the other. So it's important that you find the best one for your business. It's also important to understand all the options before making a specific commitment to one. For each international payment, you will need a supplier's registered company name, the physical address, the account or IBAN number, the bank SWIFT code, and depending on the country, you may also need their sort or routing code, the balance of payments code to be submitted to SARB, and support documentation like an invoice or bill of lading. Get these details directly from your supplier. A wrong digit in a SWIFT code or an IBAN number means your payment goes nowhere, or worse, it goes to the wrong person. And recovering funds from failed international transfers is not a problem you want to have. So double check everything before you confirm. So there you have it, a complete overview of dealing with international suppliers and making foreign currency payments as a South African business. Let's leave you with a few key takeaways. So build trust with your suppliers. It unlocks better payment terms and priority treatment during high seasons. Verify before you commit. Check registrations, request samples, and trust your instinct. If something feels wrong or dodgy about a supplier, it probably is. Understand your import requirements. So do your homework when it comes to what SARS needs, the regulatory bodies involved in importing your particular product, and also customs duties and importing fees. Compare your payment options. The cheapest visible fee isn't always the cheapest total cost. So watch that exchange rate and the markup that banks charge you. Keep good records, invoices, contracts, payment confirmations. You'll need these if anything goes wrong. I know this is a lot of information. That's why I've put together a free guide covering everything we've discussed in this video. I'll also include a checklist you can use for your first international payments. The link is in the description. If this video helped you, please give it a thumbs up. It really helps me to grow the channel, and subscribe if you want more practical business content like this. If you have questions, drop them in the comments. I'll read every single one and I'll do my best to make valuable content that addresses your issues. If you need assistance building your business website or brand design, I'd love to help. So visit my website. I'll include a link in the description. Thank you for watching. I'll see you in the next one.